The Philippine Stock Exchange in the recent years has been considered to be the world's worst share market, the world's most underperforming market, and yet many Filipinos are still investing in the Philippine Stock Exchange every day. And while we do not minimize the gains other people have made in the Philippine Stock Exchange, we personally do not invest in the Philippine Stock Exchange at all. Join me today as I share to you my discussion with my mentor, Rick Franco, who was a finance professional in Wall Street for how many years. His perspective will give a better understanding on why there are simply better opportunities outside the Philippine Stock Exchange.
So based in the US, I was working with what is known as a registered investment advisory firm. And at that time, what we used to do was we did a lot of consulting work with institutions such as BNY, Bank of New York Mellon. And then from there, we were managing portfolios. Small scale would be about $5 to $10 million portfolio for the firm, upwards to about 100 million plus. So from that experience, so I was based there for about 12 years. Now, from one of the takeaways I would say was starting from the 2008. I was there. I saw the market crash before 2008. I was driving around and I saw all the bank foreclosures. You look left, you look right. So from there, the education and the journey, the experience began looking at the capital market. So when I did the when I finished my consulting work there, and then I traveled around. One of the reasons when I came back to the Philippines, I started investing, doing business, investing in different types of asset class. One of the reasons why I think that it may or may not be suitable to invest in the PSE. Number one, it's all relative. We're not saying that do not invest in one instrument or one market. It has to be relative to another. Compared to what? So if you compare PSE to, let's say, the U.S. stock market, uh, number one criteria is there are more buyers and sellers, more market participants. So volume and liquidity. So the first thing is NYSE, New York Stock Exchange, the Nasdaq. Overall, you have about, on average, 4, 5, sometimes 6 billion volume per day. And in recent times, it actually has grown more. So what that means is when you have this much volume, you have basically good trends. You can find movements of the market that can go higher, that can last longer. And it's not uncommon to see 10, 20% movement in a matter of days, definitely months or weeks. So you have, in essence, oh, by the way, it can go both ways. So up and down, you have more movements. Compare that with, let's say, the PSE, where you have lower volume, smaller market participants relative to the US market. So if you look at certain time periods, for example, in 2013 all the way to current date, if you invested in the PSE 2013, January the 1st, 2013 until now, it has gone sideways. Basically, you made 0% gains. If you compare that and look at the charts to see, if you compare that with, let's say, the S&P 500, and you can definitely see that it has a more linear chart movement. You can say that it's a little bit less volatile in terms of the patterns, the movements. And a lot of that is attributed to basically just the liquidity, the market participants itself. So primary primarily the reason for that first. And then second reason would be you now have institutional investors that are engaged more in terms of both buying and selling. So for example, if you look at the Walmart WMT, about roughly 30% of that are institutional participants. So institutional meaning you have banks, investment companies, insurance companies. They are actually buying or and holding on to the share ownership. So what that means for us retail traders or retail investors is, we basically are investing alongside the big dogs.
That's
So
true.
they
Yeah.
buy in large blocks. They buy in large volume and quantity. So as long as you manage your risk well, that's another example of the first, going extending to the first reason of liquidity. You have the big dogs actually providing liquidity to the market, and so your money basically, we say you go with the money, you go with the big dogs. So it's right there, and that's an example for Walmart, and then there's several others. So those first and second reason are very much
Yeah.
related.
Yeah, definitely. So basically, what you're saying is that in the New York Stock Exchange, it's not just the United States that is participating in their stock exchange, but basically people from around the world. So imagine the volume and the liquidity that you have, and then add to that you have the institutional investors, the banks, the the hedge funds, and private investors coming together, which could create a lot of opportunities instead of being limited in a really small um, mi- microcosm of the economy, which is the Philippine Stock Exchange. I think we can both agree that not everyone is participating in the Philippine Stock Exchange in the Philippines. So you really don't have that much movement compared to the global markets. Am I
That's
correct?
right.
Yeah,
Yes, that's
yeah,
exactly right. So from a trending perspective,
right,
so and in terms of the word is buoyancy. So the market is
right.
more buoyant in that sense, just from the context of market liquidity and then participants. And
Right.
and you mentioned a good point where there's more global participants, which leads me
Right.
to the third reason. It's the choice of multiple asset class
Mhm.
that's available is definitely much more diverse. So what I mean by that is, for example, when people think investing, they just probably think stock market, but it's not the market. The whole market means you have the stocks, you have treasuries, you have bonds, you have commodities, you have currencies, you have
Mhm.
alternative assets. So alternative assets could mean anywhere from wine, arts,
Mhm.
and even precious metals in some cases. So now they've launched a an asset class specific to diamonds. So
Right.
one of the reasons for that is you have multiple asset class availability, and the penetration is very much easily accessible to everyone. So I'll give you an example. So in the year 20, for the whole year of the pandemic, 2020, PSC was pretty much down at least 10% at
Mhm.
some point. Compare that if you had money tied up in the S&P 500, which was up about 15% for the same time period. Gold was up
Mhm.
about 21%, corn 18%, palladium 20%, treasuries 15%. So my point is, if you had two investors, one is invested in the PSC for that time period, and then it's a typical buy and hold.
Mhm.
What a lot of investors do on a much broader scale is something called follow the money. So you go where the money goes. You follow where the big dogs are investing their capital. So
Mm.
from the PSE, you could have also moved based on your asset allocation. You could have moved to a different market in terms of geographic
Mm.
markets. So let's say from Philippines to US, and also from an asset class perspective. So from the stock market to the precious metals like gold and currencies and commodities like corn, um, even cocoa beans and hogs and
Yeah.
treasuries. So you could have actually preserved your capital more and actually outperformed the market. So that is reason number three is the availability and easy access to multi-asset class investing.
So, for example, what do you find to be the best ways to protect your capital, especially in a week like this? What the global markets have that the PSE doesn't have in weeks like this where it's basically a red week, everything is falling. What
Okay,
yeah.
so that leads me to reason number four,
Mhm.
which is risk management. So you have basically a more diverse universe of tools, instruments, as well as strategies that you can implement to actually manage your risk. So a very simple example would be, again, I briefly mentioned if the stock market is going down, then if we look at the time period when, let's say, March, starting actually February of 2020 last year, when the pandemic started, so stock market S&P was going down, but guess what's going up in the same time period? And you can look this up. Treasuries were going up. Gold, a- after a while, starting about April, gold and palladium and other precious metals, they were actually going up. So the first example of protecting your risk is a strategic asset allocation. So
Mm.
you're not putting all your eggs in one basket, as they say, but in the hedge fund world, we say it a little bit differently. So we say capital moves away from volatility assets. So if something's very volatile, capital tends to move away from that. And it's going to move toward a less volatile asset. So what it means is if capital is moving away from stocks, that means it's falling, then it's moving somewhere else.
Right.
And where is it moving? So that's our job basically, or your job as an investor. So that's a typical example is strategic asset allocation. A second
Yes.
example for risk management, if I may add, is basically you have crash insurance. No difference from having a car insurance, home insurance to protect yourself from home wreck, car wreck, health insurance to protect your health. So we also have stock portfolio insurance. So and that's something that's not available in PSC at the moment.
Correct. And I think that's what we call options, right? Like buying options to protect your positions.
That's correct. Options and futures.
Yeah, in the Philippine Stock Exchange. So the Philippine Stock Exchange has news that they would be opening shorting very soon. And and of course the global markets we've been doing that for quite some time already.
Yeah,
Uh,
forever.
yeah. What do you think is the impact for for basically a market that has very small volume and liquidity to open up the possibility of shorting as a strategy for trading?
Yeah, basically you just answered your own question there because the shorting, I remember I was talking to somebody from the PSE, and this was
Mhm.
already, I believe, 4 years ago. So it's nothing new. Shorting is something that they've been wanting to do and wanting to open up. And at that time, what they mentioned was it was only going to be available in limited capacity.
Mm.
So basically not across the board. And even today, that was 3 years ago. So even today, it's still not well established. And it goes back to the reason number one is liquidity, is the actual buoyancy of the market. There's just not enough at the moment. So
Right.
we'll see. But I think eventually, though, they will actually. It will happen. It's just a matter of time.
Yeah, because basically brokers can only lend the shares that they have for shorting. And there are very specific number of shares that they can lend before an ordinary retail trader can short. So if you don't have that many shares to begin with, then you're basically going to be competing with a very small amount of people in order to short the market. Is it correct? Am I correct in understanding how the possible impacts of what shorting can do with the Philippine Stock Exchange?
Yeah, and it can absolutely crash the market and because it's more volatile. So if something's going up, compare that with something going down, usually on the short side, you want to take a smaller position just because there's more volatility on that direction. So I think that's one thing that they're still sort of studying. And
Mm,
also in terms of transparency and reporting and just the whole back end process that goes into shorting, they're still ironing out a few kinks there. So 3 years at the making, give it maybe who knows another 2 3 years before it becomes actually more accessible in terms of liquidity.
right. So I remember you mentioned something about your portfolio, the shares in your portfolio. You can actually use it for other purposes, like taking out loans. Can you tell me more about it?
Yeah, that leads me to number five. So that's the fifth reason is portfolio loans. So
Mm,
I could go to the bank and actually have a stock portfolio, use that as a collateral, and then I basically I don't have to sell my holdings. So
mm,
what it means is if you can just imagine if let's say I have an X number of holdings, and let's just say I'm making about 10% gain, just as an
mm,
example. So a lot of advisors would tell you that, okay, that's something that as it grows, you can now withdraw, you could sell it, you could liquidate. So that's true. But what I prefer to do is because if you liquidate, then I lose the opportunity to earn that interest, that 10%. So I would rather borrow against it. And since
mm,
it's a liquid, very highly liquid asset, I could actually get very low rates. So if I'm getting 10%, I'm still earning 10%. The bank gives me the capital that I need. And I probably only pay something, I've seen like 2 3% per year on a
right.
10%, return. Now, just I'm gonna share my screen just to show you some examples.
Mm-hmm.
Can you see it?
Yeah.
Okay, so this is straight from JP Morgan, private bank, securities-based lending. That's exactly what it means is all these securities, so basically the stocks and all the other portfolio, you can borrow against it, and they
Mm-hmm.
give a pretty good example in terms of figures. So I'll show you. You have client A, client B, and this is straight from their website. So the first one is you have the $10 million portfolio, and then he wants, for whatever reason, he wants 3 million. So he has to liquidate. He has to sell 3 million, and so he is left with seven, and they calculate the return. So instead of doing that, you leave the 10 million, continue to compound, and then just borrow against it, borrow 3 million against the 10 million. So there's no liquidation, and you still have your original investment intact, and the returns are actually you come out ahead. So 690 against 480. And the net portfolio is definitely, you can look it up. So the value
Yeah.
add by using a line of credit is you have an additional 100 grand return. Okay, so
Yeah.
that's an example, and then some other banks also do the same thing. You can have HSBC do the security-backed finance, and then even brokerage companies. So this is an example of TD Ameritrade. So they have
Yeah.
TD Bank, where if you invest with them, so they call it the collateral lending program. You can actually, again, it's the same thing, underwritten by TD Bank, it says here. So exact same scenario. Instead of having to sell, having to liquidate, you're able to basically just let it compound.
Wow, that's really great. You also mentioned something about as a stockholder, you are protected from taxes at a certain point as a long-term stockholder. Like,
Well,
I think we had this conversation where you said that the reason why most CEOs want to be compensated with stocks is because it affords some form of tax protection. Can you tell me more about it?
sure. So, well, when we start talking about taxation, you have to now consider where your local jurisdiction is. So I
Right.
can't speak for a general, scenario because everyone's situation is different. But
Right.
I'll just use the U.S. as an example. That's where I'm based from. So a lot of executives, such as CEOs and basically directors, they prefer to get their compensation using stock ownership or stock options, not to be mistaken with options like options trading, but just stock equity portfolio options instead of a salary.
Mm-hmm.
Because if they take a salary, usually what that means is they're basically giving away to Uncle Sam, at least 50%. So if your income is a million, you think that's a lot? Well, your net probably will be closer to 500 grand. So, but if it's in the form of a stock portfolio, the taxes on that is anywhere between 0 to 15%.
Yeah.
But you have to check with the new administration if there's any adjustments. But generally speaking, it's the same thing. It's basically lower than salary tax rather. So what the CEOs would do is they push the stock price up.
Mm-hmm.
As it goes up, they could choose to liquidate, and when they liquidate, they instead of paying 50%, they're going to pay much lower. Or what they do is actually get a loan, like what we just showed you,
Yeah. Yeah.
a loan against it, and then they pay it back over time. And with such low interest rates, it's such a no-brainer.
So, that's really cool because you can loan against your stock portfolio and keep ownership of those stocks instead of liquidating. And at the same time, you have some leverage over the taxes you have to pay, which of course depends on your jurisdiction. But having so many options on what to do with the stocks that you buy is basically, like you said, it's a no-brainer as opposed to just buying and holding in the Philippine Stock Exchange.
Yeah, that's exactly right. So it's just a matter of having more choices, just empowering you to have more options. What do you want to do? And you can take it anywhere you go.
Mhm.
So there's a lot of flexibility.
Yes, definitely. Having a solid financial education really equips you in life. So I'm really grateful for the time that we had as in our mentoring relationship. Do you have any parting words for our viewers today?
Yeah, so one of the things that I actually just wanna close it out with is we all know about the news about the
Mhm.
Robin Hood traders,
Yeah.
the 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 short squeeze. If you don't know these vocabulary, it's okay. It's time to learn these things. But here's the deal though. When we talk about global markets, we talk about PSE and the US markets. It actually does not matter as much as where or how you're going to invest. I think that for a lot of people, you just have to ask yourself one question, and that is, what is your process? Do
Mm.
you have a process? And with that process that you have, that will answer and dictate if and when you're going to actually invest in, whether it's in Philippine stock market, PSE, S&P, the FTSE, the London Stock Exchange in Tokyo. It doesn't really matter. It's your process that will dictate where your asset allocation will be, where your risks are, and how you're going to be managing your risk. So I think that a lot of people are just investing blindly in the sense that there is no process. Maybe they follow a news, they follow something, but at the end of the day, it's not replicable, it's not
That's true.
sustainable. Again, it comes down to the process. So you have to find that for you.
That is true. Yeah, I feel sorry for those who got caught and basically the entire narrative because all of these groups were telling everybody to just keep holding while the stock price is plummeting down. So I agree with you. Once you have a process and once you learn how to have your own process in choosing which assets to buy and when to sell and all of these strategies that Rick talked about where you can maximize your the ownership of the stocks in your portfolio, that would be really valuable for you even as an individual because it's not so much on about making a quick buck anymore, but it's about having that financial discipline and going through the process and then managing your risks. And at the same time, once you have it, you're able to maximize all of the other options that the global markets have to offer. So I definitely agree with you on that.
Yeah, that's absolutely right. So it's basically stick with your process. Let that dictate your decisions, especially now where okay, Bitcoin has been moving. So I'm hearing a lot about it. Back in 2017, everybody was talking about it. Then when it crashed, everyone was quiet. Now you hear about it again. So so it's on to the next thing. So
Right.
basically, just stick with your process. Make sure that it's replicable. Make sure that it's long term. Make sure it's solid. And if you do not have a process, then go seek some financial education and some mentors or whatever it is, an advisor, talk to somebody, and then just get started with having some sort of process.
Definitely. And honestly, having a mentor would really put you forward ahead in your trading journey and investing journey because, you know, watching all of these YouTube videos and reading all of these books can only get you so far. So if you're able to find a mentor and learn from them, that would probably be the best way in starting the trading journey, whether it be in the Philippine Stock Exchange or in the global markets.
Right. So there's two approach everyone can take, and that is basically trading, which you're actually kind of your direction, trading, and then investing. So both are different, but they're very much related. So again, find something or someone that you resonate well with, and I learned from mentors also. So you can't discount that.
Mhm. Of course, definitely. Okay. All right. So for everyone who wants to know more about the options that Rick talked about using your portfolio as a collateral, or basically how to invest in the global markets, or maybe what are the other strategies that you can use so you can manage your risks in the global markets, feel free to drop us your questions or comments in the comment box below. feel free to reach out to us also through this channel, and we will try our best to address whatever questions you might have. So thank you so much, Rick, for this very enlightening um, conversation about why we don't personally invest in the PSE and all of the strategies that we can take in with the global markets. And I hope that we can have more conversations on how to maximize your options, especially in investing abroad and not just here in the Philippines. So thank you and have a good day.
Yes, absolutely. Thank you very much.